sections where we give you an opportunity to ask us, analysts of Abaca Securities Corporation, your burning questions about the stock market. So I'm Elizabeth or Beth, one of the analysts of Abaca Securities, and with me today we have Herman,
Afternoon.
our uh, property gaming analyst, and also Isaiah.
Thanks again for the MyTrade map.
So, before we get to your questions, I see there are already a few or a couple in the chat box. Why don't we start with what you want to discuss in the latest developments in the market today? Earnings season just ended for the second quarter. Any notable for earnings performance that you might want to discuss, Herman?
Okay, yeah. So earnings season is we're about to finish the earnings season. For me, some companies that stood out are Bloom, Semerara, what else? Uh, Globe, and Converge. So for Bloom, it significantly exceeded consensus and our own expectations because of the strong performance of the domestic segment. So we expect consensus estimates to further upgrade in the moving forward, which should reflect favorably to the stock price. And then for Semirara, it also exceeded expectations because of the robust showing from the power segment. So even though coal prices have declined significantly since the year started, the strong performance from the power segment was able to offset that decline. And we still expect the stock to be a viable dividend play moving forward. And we expect dividends to easily hit double-digit yields coming out for this November and April dividends. And for on the other hand, Converge, it was the performance was did not hit the consensus expectations, and this because of the sustained slowdown in the revenue growth, and also for well, but on the bright side, the company is gaining some traction in terms of prepaid home broadband. So I think they have the first mover advantage compared to Globe and Tel. So we have yet to see if it will be able to sustain the momentum for prepaid since postpaid is already seeing some saturation. And then for Globe, what's the most significant takeaway for Globe is the sustained profitability of Mint. So Mint was able to substantially outperform its closest rival, which is Maya. So Maya is still in the red, while Mint is already seeing sustained quarterly profitability. So this should improve the prospects of Mint's upcoming IPO in the next 12 months, which should also redound to the benefit of Globe. So that's at least for my coverage. How about
I think one of the most notable earnings performance for my coverage is the one that's recently um, disclosed. GT Cap had a very good first half and even second quarter this year, owing mostly to the good performance of Metrobank and most also of the recovery of Toyota Motors Philippines with net income doubling in the second quarter, in the first half rather, for Toyota Motors with the recovery in its margins. And we expect this to continue to contribute positively to GT Cap for the rest of the year. So we're still quite positive on that stock. Also for the banks, most of the banks have reported quite strong performance in the first half. Although some of the smaller ones have seen some mixed performances for the smaller banks, mostly because of the difference in the cost of funds for the banks. So for the big three, double digit growth in net interest income, double digit growth in bottom line. So we're still quite overweight for the sector, and more positive on BDO VPI than Metrobank. Although Metrobank's performance was quite good, the the interest expense for it because of its low CASA ratio or the proportion of current and savings account or low cost funds for Retro Bank is lower than the other big two banks. This could limit the expansion in the net interest income or interest margin in the second half. So, how about you, Isa? Any interesting earnings effect on the technicals of certain stocks that you like?
Actually, you were just talking about GD cap. I would like to share the chart of GD cap right now. Talking about here, said it look good. Coincidentally, there could be a bullish reversal on GD cap here. This is a very nice looking chart. So it's an inverted head and shoulder, and I know a lot of technicians who do charts. Very familiar with this. It's one of the very few that are still up to date despite a down market. So this is interesting. Also, SSI has pulled that back recently on another very good looking chart, which is I think an Apple's pick. It has support at 314. And thirdly, it's Shakey's Pizza, which has not succumbed to the selling today. It's still holding steadily up there above the 50-day moving average. So if you can have a look at pizza. Think back on it.
Yeah, unfortunately, we don't have our consumer analyst today here with us, but we'll try our best to answer if you have any questions you have on the consumer sector. Um, Also, one of the big news items recently, the GDP for the country has slowed down to 4.3% in the second quarter, which was much lower than what was expected both by the market and other economists and analysts, and even by the government forecasts and targets. So even so, restaurant and hotel spending is still one of the fastest growing components of the consumer spending GDP. So um, I think that's affecting also the restaurant stocks. That could be one of the reasons why pizza is quite strong even in a down market today. So let's get to your question. Can we see the questions? So feel free to post your questions in the comment section. First from Charles Tuazan. How is SPNEC's current 34 billion share, 50 billion market cap affecting their proper valuation going forward?
Trying to understand um, what is trying to ask. Billion market cap, like their proper valuation going forward. So in trying to value SPNEC, we try to look at the assets themselves. So the increase in outstanding shares also comes with the tenfold expansion in capacity. So I think that's the more important thing to focus on. So and the valuation will depend mostly on that and not really on the current market cap. So and as we wrote in our report, SPNEC will own around two-thirds of the secured renewable contracts by I think 2025, 2026. So that explains the significant role that SPNEC will play in the coming years, especially as we transition from thermal to renewables. So there.
Do you have any updates on any happenings on what's on SPNEC on whether it will be able to start trading again soon?
So for SPNEC, I tried to look for the most recent news report. It just said there that there is already a buyer. However, we still don't know the identity and also as to when the transaction will be closed. So, but we are still confident that it will happen within the 6-month window allotted to them.
Okay, so we've actually written on SPNEC quite a few times in our report. So if you're not yet a client of MyTrade, please sign up so you can have access to those reports. Especially recently during this earnings season, we've wrapped up our publication of reports. We have a new short short form update on each company as they report on their earnings performance every quarter. So yeah,
It's called
Yeah.
fast break.
yes, it's called Fast Break. And if you want to know more, um, yeah, sign up for MyTrade. Not only will they get access to that Fast Break report, you also get access to daily short takes where we discuss um, more up to date news on what we think will be influential in the market for that day. Next question.
Siguro just to add on Espinec, since you mentioned the valuation. Once the company sustains consistent profitability and because of its size in terms of market cap, the stock can already be in the radar of institutional funds because at the beginning, institutional funds were, I think, constricted from investing on the stock because it's not yet earning consistently or it does not have a profitable track record yet. So once Espinec, since the assets will already be infused, including operating assets, since once Espinec sustains a consistent profitability, and once market cap increases up to a certain size, it can already be under the radar of institutional funds. So there.
Next question. Yeah, from Charles Watson again. Any insights on Keeper? Yeah, unfortunately, we don't have our consumer analyst right now, but Keeper is still benefiting from greater on-site consumption of liquor. So we're still quite positive on Keeper. And as I mentioned earlier, uh, GDP for restaurants and hotels where this is included, apart from the food, food and beverage component of the consumer GDP, that's still quite strong. It's still quite the driver for consumption expenditure. So even with higher inflation in the past few months compared to the previous years, since the target market for Keeper is on the higher end side. They're not the consumers are not consumers of their products are not as affected by the higher prices. So the demand for that will still be there, and we expect this to be positive for the stock as well. How about on a technical perspective?
On the technical perspective, it did break this 165 support level, so maybe that's why you're concerned. But it has been able to hold back above this longer term trend line here. Actually, there. So it's been able to come back above that. It may take a little bit longer to trade sideways before it can regain further footing, but the overall trajectory is still higher.
Okay, I think earlier Charles also have a question on Coke. Yeah, so diba, Charles and questions. Why does Coke PH seem to change their owners like every 5 years? So recently it was announced by AD that they are joining up with a foreign partner to acquire Coke PH, Coke Philippines. As to why the owners are changing, we can only speculate. We don't have direct knowledge on that. But this acquisition will can be quite positive for AEV, even though they will be a minority shareholder for that partnership for acquiring Coke. This will diversify their businesses more into consumer, and also with with the government now, well, latest news is that they're not as keen on increasing the sugar tax. This would lessen the risk for that sector. So this will be positive for AEV over the long term. There are some incomes. Um, from Rob Haka, or any recommended REIT to hold? Oh,
Okay, so for REITs, we're still partial on CREIT. Also, the stock declared its recent dividend, which is 0.049 per share. That is higher both on a year-on-year and quarter-on-quarter basis because the company is recently is on the company has an ongoing acquisition that caused the uptick in cash dividends. We think the recent dividend payouts are sustainable. This is unlike the other office REITs that are seeing some pre-terminations from their tenants that are affecting their cash payouts. So for C-REIT, we still think that the cash payouts are sustainable, and at current prices, it's implying a dividend yield of I think between 7 to 8%. So still relatively higher compared to its peers.
speaking of REITs, what was it that you discussed a few sessions ago about the impact of interest rate on REITs?
So for REITs, since our REITs are primarily dividend plays, so if we expect interest rates to go down in the medium term, this should boost the attractiveness of REITs because their offered yields are going to be relatively more attractive compared to the current interest rate environment. So for REITs, we think they would perform well given the current forecast for interest rates to go down in the medium.
Yes, unfortunately, just today, the BSP decided to keep the interest rates steady at 6.25%. So we don't expect actually interest rates to go down in the near term, at the earliest maybe next year, first quarter. So there.
Medium term naman.
Yeah.
Okay.
Okay, next question from. Oh, how about the technical perspective on Siri?
Oh, Siri.
Okay, prepare the
Well, Siri has basically just been trading sideways recently. If you divide it by the index, just trying to. You divide it by the index, you can see that it has been outperforming the index since about 2003. So you can see the flight to REITs here, at least for Siri at least. And yes. So,
Okay. So next question from Elida Aquino. Do you have any insights on Villar stocks of the VLL home? Maybe we can start with VLL.
Okay, so for VLL, actually right now, what's getting the attention of the market are the bigger market cap companies such as ALI, SMPH, and RLC. So in times of low liquidity environment like what we're seeing now, what's really getting the attention are the higher cap stocks. So for VLL, we don't expect it to move significantly anytime soon because it's one of the smaller players. Also, its earnings are we don't expect any boost on the stock from its earnings since the residential property market is still reeling from the elevated interest rates. Um, so for BLL, so far now in the property sector, we still prefer the bigger ones, especially SMPH and RLC. We also discussed our thoughts on those companies in our fast break reports.
So for Aldi and Home, I think most of these stocks have been greatly affected by higher inflation in the past 12 months. Also by higher costs in we all know that commodity costs have increased in the past year. So um, this would affect the cost of their own inventories and um, all earnings. I believe earnings for these two companies have disappointed, not just in the recent quarter but also in the previous quarter. So we're not as or we're not very bullish on both. How about on a technical perspective?
Which stock are we talking about? This is
Any which one?
so BLL, I don't know talk about this was it earlier. So you can see it's still below the 200-day moving average, which is the blue line, and it's also below this recent dark trend line. So it has a lot of work to do with more buyers to push the price higher and absorb the supply. All day, what are we talking about? What are we talking
Or
about?
home and Aldi. Home also has been struggling with more competition, I believe, with the entry of Mr. DIY into the London market. So the chart.
All home. If this was able to break above the 188 level, it could have made a move towards the 219 resistance, but it looks like it's succumbing to more selling. Not really much to discuss on the technical because it's still in a downtrend.
No hope for no hope for technical perspective.
It's still holding support. That's what I could say about hope. It's holding support at 150.
And Aldi.
Oh. Uh, well, let's see. At best, it could be oversold within a downtrend. So hopefully, if you have it, you're looking for an oversold bounce at best. So
Okay. Next from Reagan something. Sorry. Reagan Lobaton. IMI seems to dig down until its pandemic low. Are we still a hold on it? And
Okay, so for the stock, its recent update is that it sold its stake in STI, which is its subsidiary abroad. So that helped profitability because the subsidiary is still in the red. So it's dragging IMI's earnings. So we saw some improvement from their last briefing. However, it's still, we have yet to see if it would be able to sustain its quarterly profitability. But still, its long-term prospects are good because of the shift to renewables. And if you notice, there are the news about e-vehicle charging stations are getting more frequent. So we're still a hold on the stock, but this is for very patient investors.
on the chart, please.
Alright. So IMI broke down from the 455 support level. You can see, I believe it's still inside this channel here. So support could be closer to 390.
Okay. So Gladys Maripet Yusinko asked about any news on SPNEC. If you could scroll to earlier, we discussed SPNEC at the start of this session. Scroll back. Okay. Can you scroll down the comment? And also question from Wang I don't know how to pronounce your name. I'm sorry. SMC, please, about their fundamentals and liquidity. One, I hope I said that right. Do you have any insight on SMC?
So for SMC, actually, it's not part of our coverage, and it's not also, if we check Bloomberg, there's also no active coverage on the stock. This might be due to some transparency issues from the company, but for SMC, maybe for now we'll have to rely on technicals.
SMC. So okay, so at the very least, it's above 200-day, but traded sideways for the most part. Any story behind this big down candle here? It's on the August. Might be a sign of the lack of liquidity in the stock here. So, but aside from that, there's really not much. Mostly sideways to up. Not too appealing looking. Better stocks to trade.
And maybe our last question for this session, since already only have a couple of minutes left, from Elida Aquino again. Can you please advise about ZTP? So ZTP is the uh,
Convertible.
convertible preferred shares for SEB. We're actually not that keen on SEB, on since it is, even though tourism numbers and flights to and from the Philippines have recovered, in recent months. It's not yet back to pre-pandemic levels, and will probably take some more time before we can see large or huge positive catalysts for SEM, especially since fuel costs are a big factor into their profitability, and there is an expectation that oil prices could come up again in the near term, and also the weakness, recently the weakness in the Philippine peso versus uh, the US dollar is also a drag, since this constitutes um, a significant portion of their cost. So how about, do you look at technicals for MCB? No?
Didn't prepare.
Yeah.
Well, I have actually to.
Okay, so that ends our session for today. If you have other questions, or if we've missed any questions in the chat box, feel free to post them on our Facebook groups for our clients. And if you're not yet a client of MyTrade or of Abacus, please sign up so that you can have access to our reports and to more sessions like this. We also have sessions that are exclusive to clients, where we are able to answer more of your questions, and they're usually more long term than our 30-minute session for Beyond Connection. So thank you everyone for joining us this afternoon.